Good morning, everybody. This is Chris Robinson, Robinson Ag Marketing with today's pre-opening grain and livestock comment. Quiet night overnight. Everybody seems to be waiting to see if we've can recover here in the United States after Argentina just basically fulfilled all the needs of China and soybeans. Looks like for the rest of the year. So that still pretends that it's going to make our carry out increase. I don't see how it doesn't make our carry out increase. So because of that, I'm not super bearish, but you better keep a floor under these unpriced beans. On the flip side, if you're selling them, take a look at reownership strategies when we're on our lows like here, right? At $10. The call options, out 3, 4, 5 months from now, when this all might be resolved. It may take that long to resolve this whole mess with China and get them, back on the playing field buying our soybeans. So that's a discussion to have with you, your banker, your broker, hopefully me, if you're not working with somebody. December corn last night down a penny, 4.24 3/4. November beans basically unchanged, down a quarter cent at 10.12. Chicago wheat, KC wheat. Chicago wheat was down 4.25 cents at 5.22 3/4. KC wheat down 2 3/4 cent of 509 and a half. We're going to see today if we get any more continuation to the sell side in the protein complex. These fat cattle and November feeders were lower yesterday, but we really haven't taken out the big numbers, which were the recent um, levels that we had last week. We bounced from. So we'll see if this is going to support, is going to hold. Both of these contracts, the feeders and the fats, are dancing on the 20-day moving average. If you're looking for a simple pivot uh, to watch, the less things you watch, the better. With technicals, there's 10,000 things out there that people try and sell you on, right? I've been doing this for 33 years. I mean, you know, there's so many different technical outlooks. Um, you can get kind of lost in the weeds. I try and keep it very, very simple: trend lines, retracements, and moving averages. But you can do whatever you want. It is a free country. But for my program, I try and keep it very, very, very simple. At the end of the day, we use these technicals to make decisions on, what's our risk, what is our risk, and based on what we think our risk is, how much are we willing to spend to defend that risk? It's really what it comes down to. Crude oil trading up 50 cents at 65.45. There was a meeting yesterday with the Secretary of Defense, and they had some sort of meeting where they got all the generals together that has some people worried that there might be something going on that nobody knows about, i.e., regarding some sort of military action somewhere. You have had increased incursions of Russians into NATO airspace with their drones. They've always been flying into Alaska and testing our airspace. That's nothing new. They've done that for 50 years, but they've been doing it a little bit more often lately. So I don't know if there's anything to it, but we are going to continue to watch it. So crude oil at 65, it's kind of in the middle of the little bit of a trading range. It did bounce off of 62. I can't really get excited about crude oil till it gets up north of 70. But if you're worried about crude oil going higher, you need to have the hedge on prior to it happening. People, it won't take much of a move at all. People will start trying to fan the flames of, oh boy, here goes crude oil. So we'll see what's going on there. Lots of opportunity, I think, as we move ahead, and we just try and keep our powder dry. I don't want to be making cash sales unless you absolutely positively have to. If you have to, I think you need to reown it. In the meantime, I would continue to defend 410 corn and $10 beans. This is Chris Robinson, Robinson Ag Marketing. If you're looking for help, give me a call, 312 638 8868. We'll talk to you later.